Hi everyone, I'm Mitzi Sullivan, CPA with Facts, Figures, and Fallacies from the front line. Today we're going to look at one of the biggest tax updates of 2025. We already talked about the return to the 100% bonus depreciation, but today we're going to look at a brand new incentive for manufacturers that are building new structures. This is really a game changer for manufacturers building new structures because it allows bonus depreciation on the actual structure, which normally would be depreciated over a 39-year period. Manufacturers can now deduct after January 19th, 2025. Manufacturers can deduct 100% of the cost of those structures placed in service after January 19th, 2025. The law introduces a new category called qualified production property. That's QPP. And you get 100% expensing of that qualified property. But there are some pretty strict guidelines about what qualifies for this deduction. So the first one is pretty simple. The construction needs to begin after January 19th, 2025, and then the property needs to be placed into service before January 1st of 2031. The space must be used directly for manufacturing. So if you have office space or you have administrative space, that doesn't qualify. It's only the space dedicated 100% to manufacturing. And so you may end up needing to get a cost segregation analysis to allocate the portion that's manufacturing and the portion that is office or administrative space or sales. That doesn't qualify. Also, break rooms, research and development do not qualify. The space must be used directly in manufacturing. So even though bonus depreciation is automatic, in other words, you have to elect out of bonus depreciation, the QPP is not automatic. So we need to elect you into the QPP deduction. But the QPP applies to real property, and that's something we never had for the most part with bonus depreciation. You do need to be aware of the pitfalls. So 2 pitfalls that you need to be aware of. You need to keep this property in manufacturing use for 10 years, or you could have the depreciation recapture. And then the other pitfall is some of the states may not recognize this. So if you're in a state that has income tax, this might not be the best deduction for you because you may not be able to deduct the QPP against your state income. This is a powerful tool for manufacturers to reduce their income and invest in growth, but the rules are pretty complex and the timing matters. So if you're considering a new facility or major upgrades, make sure you plan ahead. Thanks for watching, and don't forget to like. If you have any questions, drop those in the comments section. And we've also attached the bill so that if you want to dig a little deeper, you can download that bill in the description below.